motivation that led success so high. I will achieve, I will fly high. I in SBI.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.
The government has done well to bring the unbanked under the banking fold with its Pradhan Mantri Jan Dhan Yojana. However, there are still some areas which lack access to bank branches. The government is now trying to serve these villages as well. Last week, reports highlighted that the government would open 300 branches to serve the unbanked areas by December. 95 of these would be opened in Rajasthan and another 54 in Madhya Pradesh. Good morning, my name is Ishan Gera and you're watching the Business Standard Banking Show. In today's episode, we will cover FM's statement on bank reforms and privatization and the RBI governor cautioning Indian banks. We have an interview lined up with Ittira Davis, MD and CEO of Ujjivan Small Finance Bank. In our Banking for You section, experts will explain RBI's fraud registry and our banking expert Tamal Bandyopadhyay will shed light on the new SC judgment on IBC and the problems with the system. At the end of the episode, we will discuss the last poll's results and ask you the question for this week. So stay tuned till the end. First, here are the banking developments of the week. The finance minister at an event said that the government is committed to its goal of PSU privatization and bank reforms. The government had promised the privatization of 2 public sector banks, but it has not been able to table the bills in the parliament. Sources indicate that besides IDBI, the government may put Central Bank of India and Indian Overseas Bank for privatization. The centre is looking to remove the 10% shareholding cap for individuals in public sector banks, Business Standard reported last month. Private sector banks, on the other hand, have been trying to raise money. ICICI Bank may raise up to Rs 10,000 crore through infra bonds for project financing and affordable housing. Business Standard reported the bank's borrowing through long-term infrastructure bonds stood at 38,809 crore rupees at the end of June 2022, up from 22,139 crore rupees a year ago. Last month, Bank of Baroda had raised 1,000 crore rupees through infra bonds at a coupon of 7.39%. Meanwhile, even the RBI governor has warned banks to prepare for the worst-case scenario. In an interview with Zee Business, the governor said that banks should always be prepared and thus should raise capital. He highlighted that banks needed additional capital to sustain the current growth rate of loans. Bank credit expanded 15.3% YOY as of August 12, whereas deposit growth lagged at 8.5%. Earlier this week, the Reserve Bank of India imposed a penalty on 5 cooperative banks for failing to comply with regulations. The central bank imposed a penalty of 25 lakh rupees on Karnataka State Cooperative Apex Bank, 15 lakh on Bharat Sahakari Bank Thane, and 5 lakh on Rani Lakshmibai Urban Cooperative Bank Jhansi. A fine of 2 lakh rupees was imposed on the Nicholson Cooperative Town Bank No. 8, Thanjavur District, Tamil Nadu, and 10,000 rupees on the Urban Cooperative Bank Rourkela. RBI has been tightening norms for cooperative banks to prevent bank failures. While the road has been getting tougher for cooperative banks, small finance banks are finally emerging as serious players. Business Standard's Bhaskar Datta had a conversation with Ittira Davis, MD and CEO of Ujjivan Small Finance Bank, on the bank's performance in the first quarter and its future trajectory.
Ujjivan Small Finance Bank reported its highest ever quarterly net profit in the first quarter of the current financial year at Rs 203 crore, as against a net loss of Rs 233 crore the same time a year ago. The Bengaluru-based bank's strong performance in the quarter gone by was owing to a healthy rise in net interest income, a decline in bad loans, and a robust disbursement of loans. We have with us Mr. Ittira Davis, the MD CEO of Ujjivan Small Finance Bank, to talk about the lender's performance in the first quarter and to detail the trajectory going forward. Welcome to the show, Mr. Davis.
Good morning. It's good to be here with Business Standard.
Thank you. As you posted a strong set of numbers in the first quarter, and you said that there is a continued traction on the collection side at 99%. So what is your estimate for the loan growth for the year as a whole?
The loan growth that we are targeting is normal, a good year, 25% to 30% is a good for us. Considering that we are coming out of a COVID situation. The third and fourth quarter of last year was very good. We had, record disbursements in both those quarters. And compared to those quarters, the first quarter was slightly less. But, normally the first quarter in our business is lower compared to the other three quarters. So as a comparison to the first quarter of the previous year, this is also a record. So I think, overall, the traction is good. There is demand in the market for, the after the COVID situation. So we expect 25 to 30% growth for this current financial year.
So what would the structure of the loan book be like going ahead? So you have said that the bank would want to, bring down the share of microfinance loans. So where will the focus be going ahead?
The microfinance business, unless we have, these black swan events, is a very good business to be in and has got its own, business model. But having said that, it tends to be mostly unsecured loans. So what we are really trying to achieve is a better balance between secured and unsecured. Now, part of that can come from microfinance customers because they have been dealing with us over the years. So what we are trying to do, for example, is two-wheeler loans, which is secured. We're looking at gold loans, which is also secured. And, we have also grown in our own book, the affordable housing book, which is currently about 15% of our portfolio. And also the micro and small enterprises, which is about 10%. So these 3-4 areas are the areas which will be looking at increasing our secured portfolio going forward. So that, eventually, perhaps by the end of this financial year, it is a 65-35 from where it is currently at 70-30. We move it to 65-30, slowly 60-40. And then eventually, we'd like to see it on a 50-50 ratio in 5 years' time.
So what is your guidance for net interest margins? Given the fact that the RBI is on a monetary tightening cycle, you have announced some hikes in deposit rates and yours are amongst the highest for SFBs. So what is the future strategy for deposit mobilization? So particularly on the retail side?
Yeah, the retail deposit mobilization is our focus right now because we'd like to grow the retail base that we have. And all our branches are working towards that, with the good rates that we are giving, which of course right now we are trying to link these special rates with the 75th anniversary of independence. So we have given these 7.5%, etc., which is sort of linked for the 75 weeks. So those are good rates. It will be there for a period of time, and we will watch the response of Reserve Bank to the current inflationary environment. If interest rates do go up, then we'll have to react to that. In the short run, NIM may get squeezed a little bit by a few basis points, but that is not something that we are too worried about because of the growth of the loan book. And overall, the other conditions of business, the cost-income ratio and other things are under control. So bottom line shouldn't be a problem. NIMs may be squeezed in the interim period. That's the way we are looking at things.
So there has been a significant, fall in your bad loan ratios and your provisioning in the first quarter. So while your slippages have normalized, what will the picture for the whole year look like? And what is your guidance on credit costs?
See, we don't give guidance at this stage, but having said that, the traction is very good. No, we made all the provisions upfront as required under the RBI guidelines and the accounting norms. So that was why we had a tough previous year. But with the collection focus, with the economy coming around again, that is all helping us to improve collections. And a lot of people are coming forward and saying that they want to regularize their accounts. So all of those are helping us to improve the collections. We are hopeful that this traction will continue for the rest of the financial year. And if it does, then the numbers are going to look good.
So could you provide us, with the timeline for the completion of the reverse merger with the holding company?
Yeah, that is something that we are also working on. The first thing that needs to be done is to bring down our holding company shareholding, because minimum public shareholding has to go up to 25% from the current 17-18% level right now by December, because that is 3 years from the time when we did our IPO, and that's the SEBI guideline. So once we are able to achieve that, that will be the trigger point for us to go back to the RBI, seek their concurrence, and then get back on track to complete the reverse merger. So from the time the QIP is completed and we get RBI approval, we expect it will take 1 year for the Nclt, because it's mainly the Nclt which has to approve. And the holding company and the bank are both registered in Bangalore. So it's the Nclt in Karnataka which has to review it. And since both companies are here, we expect that the process should be reasonably quick once we have RBI approval.
And thank you very much for an enriching conversation and for joining the Business Standard Banking Show, Mr. Davis.
Thank you, Bhaskar. Thank you very much.
Davis says the bank is trying to achieve a 25 to 30% loan growth in the current fiscal and a better balance between secured and unsecured loans. He further highlighted that the bank would target growth in affordable housing and micro and small enterprises. Banks have been trying to grapple with another issue, that of rising online fraud. While the government and RBI efforts have paid off to a certain extent, the central bank is going one step further to create a fraud registry. In our Banking for You section, our experts explain what RBI's fraud registry is.
The government reportedly received over 60,000 complaints of digital payment frauds in May this year. The digital payment ecosystem has been witnessing a battle of sorts between the law enforcement agencies and those breaking the law to siphon off money from unsuspecting people. To check such digital frauds and protect customers, the Reserve Bank of India is considering setting up a fraud registry which will maintain the database of various fraudulent websites, phone numbers, and IP addresses. The registry will also include the modus operandi of digital frauds. According to RBI Executive Director Anil Kumar Sharma, the registry will help in avoiding repetition of frauds, as the websites or phone numbers of fraudsters would be blacklisted. The central bank is currently in talks with different stakeholders on setting up the registry, and there is no definite timeline as to when exactly this would come up. Once set up, payment system participants will be provided access to this registry for near real-time fraud monitoring. Customers will get educated on the fraud risks as the aggregate fraud data will be published. Of late, there has been growing awareness about the risks of digital transactions. All the stakeholders in the financial ecosystem, including the banks, have started alerting their customers to avoid sharing critical information such as passwords and account details. For instance, public sector lender State Bank of India frequently issues warnings and guidelines about various frauds. Earlier this year, the RBI had also warned of frauds in digital transactions. The central bank cautioned the public to be aware of fraudulent messages, spurious calls, unauthorized QR codes, etc. It had also published a report on the safe banking practices.
I am the blue of the limitless sky. I am the inspiration that led success soar high. I will achieve, I will fly high. I am the I in SBI.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.
RBI shall maintain a database of websites, phone numbers, and IP addresses, even the modus operandi, to reduce the menace of fraud and rewrite the rules of the game. A judgment by the Supreme Court revisiting the IBC process has created a flutter in the industry. SC has made a distinction between operational and financial creditors and invented a new category called temporary default. Our consulting editor Tamal Bandyopadhyay sheds light on the ramifications of the judgment and the IBC process over the last 6 years. Hi Tamal, thanks for coming on the show.
Thank you.
Now, in this week's column, you start with the arrest of a nominee director. There was a time when banks used to be scared of the three C's, the CVC, the CAG, and the CBI. Now you highlight that the arrest would lead to a kind of fear psychosis. Now, is that again building up one? Two, is it justified under the Companies Act?
Well, yes, this is not the first time. If you remember, sometime in November 2021, former SBI chairman Pradeep Chaudhary also was arrested. Of course, the cases were different. Here in this case, this gentleman, Samir Nath, is 74-year-old, and he was on the board of a company, and this company did not pay the PF dues, did not deposit the money with the commissioner, and that's how he was arrested. Now, Companies Act 2013 does not distinguish among the directors, the nominee directors, the so-called independent directors, or even executive directors. It's not in the right spirit, and it will create a fear psychosis, and you will find it difficult to get nominee directors on the board after such kind of incidents.
Now, you also discussed the ramifications of the new SC judgment. Can you explain in detail how this changes the resolution process?
Well, it's interesting, If you see the first case under IBC came into picture in December 2016, and the first case where IBC, which gone to the court, and which is the ICICI Bank filed against Innovative Industries in Pune in 2017, August 2017, and the Supreme Court judgment said is this, I read out, the moment the adjudicating authority is satisfied that a default has occurred, the application must be admitted unless it is incomplete. Adjudicating authority, Nclt. Now, in this case, the latest case, which is in relation to Vidarbha Industries Power Limited, what the Supreme Court says, under Section 7 of IBC, it is the Nclt may admit, which in contrast to Section 9 of IBC, which deals with the operational creditors, the supplier of goods and others, etc., in contrast to the lenders. In that case, shall. So it is distinguishing between operational creditors and the lenders, the financial creditors. And it says that it is the Nclt is discretion, not only distinguishing between operational creditor and the lenders, financial lenders. You're also talking about a new genre of default, which is temporary default. Now, in sum, this will only further slow down the IBC process, the loan resolution process, which is crawling at the moment.
Now, you talk about further slowing down of IBC process, and you discuss a few interesting numbers there, right? How do you think IBC has worked out over the last 6 years that it has been in operation now?
It's still at an experimental stage. Let me bear with me some numbers I'll give you. I think under Section 12 of IBC, which was earlier, it spoke about lesser number of days, but in I think 2019 it says about that the case must be solved once it admitted into Nclt in 333 days. 333 days.
Yeah.
And what happened is up to March 2021, we have seen that 406 days it took for 354 cases that year. And then March 22, the days gone up, 449 cases. 449 days it took for 494 cases. And as we speak, till June this fiscal year, it took 709 days for 23 cases.
Yeah.
So the days are increasing. Till June 2020, we have recovered about 31%. 7.67 trillion, 7,67,000 crore money was involved in the process, and the recovery was 2.35 trillion. Till September 2021, the recovery rates were 35.89%. And then by December 2021, it dropped to 33.1%. Now it has dropped to further 31%. So number of days are stretching, number of days taken, and the recovery also going down. Now, one way of looking at it, that the low-hanging fruits at the initial stage, you pick them up and you
Yeah.
got good money. There are certain other reasons also, if you wish, we can discuss.
What are these other reasons? And two, more important, what needs to change here?
Certain time you will find you get a shock that liquidation value is only 5% or 2%. Now, it depending on what kind of industry it is. Certain industry, you start losing value. If it's not in operation, if it's not in working condition, you start losing value. Now, our IBC does not have any provision for preservation of assets.
Mm-hmm.
That's the key difference between IBC in India and overseas. Now, Nclt deals with IBC cases, but not only the IBC cases. Nclt is saddled with the old BIFR cases, as well as the Ministry of Company Affairs. All the mergers and acquisitions need the nod of the Nclt.
Yes.
Now, I am reading out this number of cases at Nclt pending. As on June 2022, the number of cases pending before Nclt, hold your breath, 21,089. Out of this, 13,188 are IBC related cases.
Okay.
So it's like Indian judiciary. Nclt has only 16 benches.
Yes.
Only 16 benches. And and there are 29 courts under these benches, and there are 31 members. There should be 63 members. So 32 vacancies as of June, 32 vacancies exist. And the 16 benches and 29 courts are not enough. So there are a string of things need to be done. Having said that, do we say it's a complete failure? IBC, certainly not. The threat of IBC actually has changed the body language of corporate India.
Perfect. Thank you. Thanks a lot for your time. We hope to discuss more things with you next week. Thank you. Tamal believes the category of temporary default will further delay the process. He also highlights the IBC process needs to evolve as liquidations are high and the days taken for resolution rise as recoveries decline. Last week, we asked you if RBI has done enough to ensure cybersecurity discipline. 64% of the people responded in the negative. RBI and the government needs to do more in this regard. As the cost of education is rising and the government is making a call to build human capital, we want to know if you think the government needs to provide more support for education loans. Our polls will open on Friday and you can respond on Twitter, Telegram, Instagram, LinkedIn, and our website. We'll be back next week with more news and analysis. Thank you for watching.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.